Hello and welcome to another Smaulgld live stream. It is Friday the 5th of April 2019 and tonight's topic is Reuters says Saudi Arabia aims to ditch the dollar and end the petrodollar. Is this one of these game over, game changers, dollar collapse, end of dollar hegemony, multipolar world, China to crush the dollar, Petro yawn? Probably not, and we're going to go through it fairly extensively. We're going to take a look at some of the prior Saudi dealings with the United States. We're going to talk about the importance and lack of importance of the petrodollar. We'll give you a history of that. But we're also going to have some news on the Fed, Donald Trump, surprise announcement that he made today. We've got some other news to go through, some crypto news, some gold and silver news. But let's take a look now at the prices of the precious metals today and the stock market, which, despite Trump's announcement, which you haven't heard yet, the dollar index was up slightly and the stock markets weren't up very much. There was a jobs report. It was fairly good. About 199,000 for the month of March. 199,000 new jobs. And the gold price today, well, it went up a little bit. And it ended up about $2.37. Excuse me, closed at $12.92. And that's where it's going to be until Sunday night, because it is Friday evening and trading has ceased. Silver up a very small amount, not as much as gold, up 2 cents to 15.13. It's actually now at 15.08. It did close down a bit since I made this chart. And what did that do for the unsustainable gold silver ratio, out of whack and so on? Well, it did not help at all. You know what we're having problems with here? Giving you bad information. I'm looking at yesterday's prices. Not much different than from today's, but let's take a look at today's prices. All right, the gold price today actually was down very small amount, down 0.11%, and it closed at $12.92. That's where it is right now, so it's essentially flat from yesterday. Silver, however, did not go up a little bit. It actually went down 5 cents today. That's why I was not matching my after hours with the close, because the close and the after hours are the same on Friday because there are no after hours trading. So silver closed at 15.09. That's down 0.31%, and that means silver fell more than gold. And what does that do to the unsustainable, out of whack gold silver ratio? There you go. It went up, back up towards that multi-decade high. Closed at 85.64 to 1. Remember, tomorrow night is Saturday Night Silver with Smaulgld. We're going to go through some additional silver information. We're going to take a look at the COMEX vaults. We're going to take a look at the commitment of traders. We're going to take a look at some multi-year charts for gold and silver and the gold-silver ratio. And we're going to also take a dive into the U.S. Mint silver numbers and the Perth Mint silver numbers through the first quarter of 2019. So mark your calendars, tomorrow night, 7 Eastern Standard Time, Saturday Night Silver with Smaulgld. Over in the equity markets, as I mentioned, the Dow was up very little. It was up 40 points. NASDAQ up 46 points, but that's about a 0.5% gain. S&P also up about a 0.5%, up 13 points. So the Dow Jones closes the week at 26,424. NASDAQ closed at 7,938. And the S&P 500 closed at 28.92. Crude oil at 63.26 cents a barrel. That's moving up. And Donald Trump says he doesn't like when oil prices move higher. And we'll get into this whole OPEC, NOPEC, and how the U.S. is dealing with Saudi Arabia and how Reuters thinks that Saudi Arabia is dealing with the U.S. In other gold stories, Romania passed a bill looking to bring back their gold from the Bank of England. I hope they have better luck than Venezuela did. They probably should be able to get their gold back, but who knows? Notice there's there's two things. There's a repatriation craze amongst many of the European nations, like the Netherlands, Germany, wanting to get their gold back that had been held at either the Bank of France, the Bank of England, and or the New York Fed. And then there's also countries, central banks adding gold to their reserves. Interesting, but this is one where Romania wants to bring their gold back. As far as I know, that they have not added any gold to reserves. Fun story here. I like to carry stories. Actually, I haven't kept it up to date as much as I should have, but I've got a lot of stories on edible gold. Here is the latest. Gold dusted crisps and a 700-pound mega burger go on sale in Japan to celebrate the new emperor. So it's gold leaf. That's what they like to put on the crisps, and it doesn't taste like anything from what I understand, but it does look very nice. Now, Russia. This is a story. Russia is looking to remove its VAT, its value-added tax on precious metals. And Bron Chucheki, who used to work at the Perth Mint, is saying here, then potentially Russians could transfer 2.6 to 4.4 billion from their foreign currency holdings into gold. I guess he's suggesting that Russians don't like to hold the ruble. They may hold foreign currency instead of the ruble. And then it says it fits in the general course of de-dollarization of the Russian economy. That would probably lead to some additional gold demand. I doubt they would transfer all of their, I don't know what that number represents, those 2.6 to 4.4 million. But it would create some gold demand. I remember Russia does have domestic gold mining production, and a good portion of that gold each and every year, as we've seen in the reports we do monthly on the Russian central bank's gold reserves. They had maybe 86% the last 2 years of the domestic mining production go straight into the central bank's coffers. The question here is, would this create additional demand outside of Russia? Meaning, would, if Russian citizens were to go on this purported gold buying binge because VAT has now been removed, hasn't been, but if it were to be removed, would it strain or put some pressure on gold supplies if there was a sudden surge of Russian citizen gold demand, and therefore they'd have to import gold? Who knows? We'll have to wait and see. It's definitely worth pointing out, as Bron Chucheki has noted. He didn't put all the game over and game changer. Now let's talk about the market. So today, the payroll, as I mentioned, up 196,000. That was pretty much in line, ahead of expectations of 177. And the payroll, the wages were also up. So you've got a decent job market going. You have 1.52% inflation, according to the way the Fed calculates it. And supposedly the economy is doing well, but all of a sudden they've stopped the tightening cycle, and they've indicated, they might raise rates once next year. That's not good enough for Donald Trump. Listen to what he had to say today. Actually called for explicitly for QE. However, the markets did not react as if QE is on the table and QE is a fait accompli, as they say in Italian. All right, but let's listen to what Donald Trump said today, and then we'll get reaction from you guys. At the end of the show, for those who are new to the program, we take all comments at the end. I generally have some prepared comments and analysis for you, and then we review it at the end of the program. And if you're interested in making a comment that you would like me to comment on, or you have a question, put Smaulgld in at the beginning of your response, because that actually gets highlighted, and then I can see it a lot easier. A lot of the discussions you guys have are amongst yourselves, and it's hard for me to pick out the comments that you want me to comment on unless you call them out with this Smaulgld, Smaulgld. Now, Trump says, this is his quote, and then I'm going to let you hear it with in his own words. This isn't just fake news from CNBC. He says, I personally think the Fed should drop rates because they're slowing down the economy, and instead of quantitative tightening, it should actually now be quantitative easing. Let's have a listen.
Well, I personally think the Fed should drop rates. I think they really slowed us down. There's no inflation. I would say in terms of quantitative tightening, it should actually now be quantitative easing. Very little, if any, inflation. And I think they should drop rates and they should get rid of quantitative tightening. You would see a rocket ship. Despite that, we're doing very well.
So, you would see a rocket ship if Trump had his way with the Fed. Now remember, he's getting 2 new appointments to the Fed board. He's proposed Herman Cain, former Kansas City Fed chair, regional bank, and a guy named Philip Moore. Both are more or less hard money guys, although they seem to be on board with rate cuts. So who knows how these people will act. They are indeed political appointees. The Fed is a very confusing beast because it's not run by the Treasury as other central banks are run by the country. It's supposedly an independent bank which gets its appointments from elected representative. It is a creature of statute. It's a very odd type of central bank, and we'll see if Herman Cain and or Philip Moore get confirmed to the positions. They both have their own issues, Philip with taxes and Herman Cain with harassment issues in his past as well. All right, so that's our friend Donald Trump on the Fed. Chinese news. This is the only one I got for you today, but we've been talking for years about how the gold pumpers just keep promoting China as some type of golden paradise because everyone there is smart. They read Sun Tzu and they like gold. And Americans in the West are dumb because they don't understand gold. And they used to shout from the treetops that China is smart and they are buying gold. And they are going to crush the dollar. Not realizing what a tremendous amount of debt that China has been and is taking on. And always saying the United States just borrows money and doesn't produce anything. And China is some golden paradise where all they do is work. And at the end of the day, when they're done working, they rush out to the nearest gold store and they stack gold because they are smart. Well, they seem to be living in what they call here, this is New York Times, how China turned a city into a prison. Cameras everywhere. Children are interrogated. Neighbors become informants. Mosques are monitored. Cameras are everywhere. But they have gold and they are smart. And I'm going to be like Chinese and I'm going to buy gold. You hear this non-player character gold pumper narrative. We're going to get into this gold pumper narrative when we get to the end of the petrodollar. Game over and game changer. Yes, indeed. They are full of them. Gold back yuan. Silver shortage. JP Morgan is buying silver. They bought hundreds of millions of American silver eagles and Canadian silver maple leafs. They are stacking the shiny. And they are going to let silver go higher. And that is why JP... What a bunch of nonsense. Anyway, I diverge. But let's get into the crypto stories before we hit the petrodollar story. Last night I failed to mention we were talking about the upcoming Consensus 2019 crypto conference, and I mentioned how eBay was going to be there, and IBM and Fidelity, and a bunch of speakers, including Hester Pierce from the SEC. What I failed to mention was there's going to be 2 congressmen from the United States and 1 New York State assemblyman. And these are 2, I just want to give you a flavor of what these guys think about cryptocurrencies. So the 2 congressmen that are on deck to be there and speak, Representative Davidson. He is a big fan of cryptocurrencies, and he comes, I think one is from Minnesota and the other is from Ohio. I think Emma is from Ohio, and he's going to speak too. And he says he's going to continue to fight for cryptocurrencies in Congress. So all of this type of news indicates that there are people in Congress, there are people in the Senate. I believe Senator Grassley, and presidential candidate Tulsi Gabbard are on record in the disclosure statements as actually owning cryptocurrencies. So this idea that somehow the government is against crypto and they're going to shut it down, complete and cow's utter nonsense. And as we'll see with all the different regulations that are going on, they're definitely looking to move cryptos into the mainstream payment system, trading systems, taxation systems. Now, people who like cryptocurrency, they don't like this news. And I was realizing that I actually take two very unpopular positions. If you are a die-in-the-wool, I like silver, and silver is rarer than gold, or a real gold bug, and you hate cryptocurrencies, you don't like to hear this. You want to hear that they are going to crush crypto, because crypto is a waste of time, and crypto has no intrinsic value, and cryptos are all going to zero. And you will see one day when, okay, there's that side. So I don't appeal to those people. Then there's the other side, the Bitcoiners and the maximalists and the Litecoiners. Bitcoin is going to take over banking. Be your own central bank. Banks will be out of business when Bitcoin takes off. Bitcoin will be a global currency and will eliminate useless fiat. I mean, there's those people too. And I don't take either of those positions. So I don't attract the die-hard crypto pumpers or the die-hard gold or silver pumpers with my analysis on cryptocurrencies. My analysis on cryptocurrencies is not taking a cheerleading position that the government's going to shut them down or that they're going to shut down the government. I mean, there are people, the crypto bugs and the Bitcoiners, you know, they're saying the dollar's days are numbered the same way the gold people say it, but because Bitcoin is going to do it, it's going to end the Fed. You know, everyone's going to walk around with a treasure, and it's going to be glorious. I don't believe that either. I believe what's going to happen to cryptocurrencies, they're not going to shut it down. They're going to try to take as much of it into the financial system, into Silicon Valley fundraising, into Wall Street issued products, ETFs, got cut off again there, but we're back. I was saying that what's going to happen is not they're going to shut down cryptocurrency, and not that cryptocurrency is going to shut down the government and central banks, but you're going to have all the cryptocurrencies rolled in, not all, a good portion of them rolled into the Wall Street trading platforms, Wall Street storage solutions, Wall Street products like ETFs, and Silicon Valley is going to bring ICOs to market backed by Wall Street. You're going to have accountants and lawyers and SEC review and CFTC review, and the bulk of your crypto activity will happen in the full purview of trading. Now, to people that are Bitcoiners and the privacy and the anarchy and the crypto anarchy and the anarcho-capitalist point of view, they don't like that one bit. That's fine. They can continue to use cryptocurrencies, or they can try to use them in an anonymous way, in a tax-free way, but a good portion of people don't share those types of views, and they don't even think that way. So, for example, someone was telling me the other day, well, once they start taxing it, or once they start being able to track it, well, they can track right now when you buy a share of Apple stock, and people know that, and they pay their taxes on it. The reason they buy Apple stock is not of any type of philosophy of life. It's because they want to make some coin, and they think it'll go up. It's the same reason a lot of people will buy Bitcoin. They don't necessarily have to buy into the whole... It is transparent. It is a decentralized blockchain, and it has... They don't care about that stuff. The average person, institutional investor, they're just trying to add a little pop to their portfolio. So, if they can do it, quick example, you put 1% of a $100 million portfolio into cryptocurrencies, you lose it, you lose it. Your portfolio is down 1%, assuming the rest of the portfolio is flat. Chances are the portfolio is up. You didn't lose anything. But if you get an outsized gain, you get a 10x gain on your 1% crypto investment, you get like a 10%, you now locked in a 10% gain on the whole portfolio if the portfolio does nothing. So as far as I can tell, your average hedge fund investor is going to put, once they're able to, a very, very small percentage, not a big percentage, because chances are it goes to zero. Nothing ventured, nothing gained. See, when you have a lot of money like that, you could put a 1% allocation, a 0.5%. But 1% of 100 million and then a few billion of investor money like that, it ends up flooding the, quote, ecosystem and can really boost prices higher. So that's why I believe that what's going to happen is not that governments are going to shut it down and everyone's going to be arrested. And then the gold and silver people think, well, that's great because now they're going to go buy gold and silver. Because gold and silver are real money. You'll hear that. And I don't think it's going to be a case where cryptocurrencies are just going to remain outside the system and be some type of alternative universe that eventually is going to collide with the banksters and destroy them because it's so much better than worthless fiat. And I think what's going to happen is it's going to be largely subsumed into the financial system around the world, meaning the payment systems, the trading systems, the storage facilities, the ETF type of products. And maybe eventually a central bank or two might hold, again, a small amount, just as they might hold the Chinese yuan 1% in their reserves. They might as well hold a small amount of Bitcoin, let's say. They don't have to, but again, my point of view is not popular with either the gold and silver bugs or the crypto bugs. It's kind of a, most people like to look at things as black and white. They get comfortable with, yes, and when Bitcoin gets to a certain point, the governments will shut it down. And they're convinced of that. I can't see any other reason why that wouldn't happen. Well, maybe because they're not viewing it as a threat, because they're viewing it as a way for their clientele, the big donors, to make some money. There already are a lot of crypto people who have a lot of money who have already lobbied New York State very heavily to get bit licenses, to get regulation. Wyoming is aiming to become a state where Bitcoin type cryptocurrencies, blockchain projects get legal status as property. Bitcoin is money. We saw Ohio now accepts Bitcoin as payment of taxes. The Bitcoin people don't really like to hear this. They think that it's like selling out to the man. And of course, the gold and silver people, they don't want to hear it at all because it destroys their narrative that governments are just going to shut it down and then recognize real money in the reset, gold and silver. Again, I don't believe either of those things, and that makes the channel not very popular because there are masses of people who are rabid gold and silver fanatics that want to cheer on somebody who's cheering on gold and silver and bashing crypto. People have told me I should be bashing crypto. It should be like my life's goal because it is evil and it is the mark of the beast. And I've already explained why it's not the mark of the beast, because if you know your last book of the Bible, it talks about not being able to transact unless you have the mark of the beast, the chip in the hand or in the forehead. No one forces you to use Bitcoin. The fact that it's digital doesn't make it mark of the beast. But again, I digress. All right, let's see what else we have in the crypto story before we get on to our topic of the evening, which is this end of the petrodollar. Pretty much nonsense. All right. Now we're starting to get the hype again in the Bitcoin space. There's a Bitcoin 7,000. Bullish Bitcoin technicals thrills analysts to predict next leap beyond 7,000. Yeah. A month or so ago, it was end of cryptocurrencies. It's going to 2,000. I don't know where they come up with this stuff, but they do believe what they believe. Google searches for Bitcoin up threefold. That makes sense. You see something rise 21% in a day, and you wonder, what is this Bitcoin thing? Bitcoin. There's a slip. I have to edit this one. Bitcoin. This is in MarketWatch. Is a hedge against new world of central bank policies. This is the whole Bitcoin to crush central banks and so on. But this particular individual runs a hedge fund, and of course, he says Bitcoin is a hedge against the new world of central bank policy. They are printing money hand over fist, and Bitcoin has limited supply of 21 million. There's that narrative there, and the whole world is going to use Bitcoin, and then it's going to be game over and game changer and so on. Again, somewhere in the middle, I believe. Lightning Network. This is an adoption issue. It's pretty good, though. The easier it is for people to use, and I do have this Square thing. I'm testing it out. I didn't think it was that easy to use, and maybe that's why they're not. But they say they sold 200 million almost worth of Bitcoin through the Cash App, the Square Cash App that Jack Dorsey owns. I'm looking at my wallet right now. Yeah, I bought like $50 worth, and it's now worth like $62. So that's kind of cool. And it has on there how much cash I have, 0, and then your bank name. And anyway, it makes it easier. I suppose I can. I probably should try to spend it or do something with it, so I can let you guys know how easy or hard this is. But again, the more they make it accessible to people, the more people will try. And that's what we were talking about, those ATMs. There's now about over 4,500 of them in the world, over 2,800 in the United States. And, people see those. They're in the store. If you can buy $50 worth, I'm sure people will. I mean, you might as well buy that instead of a lottery ticket. And you can always spend it back in the store in many cases. All right. What else do we have for cryptocurrencies before we get on to the Petrodollar, the end of the Petrodollar? Oh, this one's very important. Investment. I keep talking about, again, people who are against cryptocurrencies, they think it's useless, it's worthless, no one accepts it, no one does anything with it. They are not paying attention one bit as to the money that daily flows into cryptocurrencies. I'm not even going to go through these, just throw out the numbers. New $50 million fund makes first investment in blockchain ID startup. That's just today, just a minor deal, but this happens every day. Here's one. Coda round leads $15 million funding for O1 labs, including Coinbase, Paradigm. So Coinbase is also investing in a lot of ancillary crypto services. Here's another one with Coinbase. Coinbase and Paradigm invest. Oh, this is the same one. $50 million in startup. And here's another one. A lot of exchanges going public. And Coinbase hasn't gone public. That'll probably go public in the next year or so. But here you go. Crypto exchange launches. It's called IronX, following a $26 million ICO. A lot of money flowing in, and that's why it's not going away. And I've heard SEC, CFTC, people in government, all on the record, they're well aware that it's not going away. And what they're trying to do is put it in the best possible regulatory structure so they can track, trace, and tax it. And that their bankers and lawyers and accountants and Silicon Valley venture capitalists can make their money off of it. And as long as investors are protected. But investors are always going to lose money. The purpose of the SEC is just to make sure that there's adequate disclosure so people know that in the documents that are produced, assuming they even read them, which people don't, that they make an informed decision. But, I mean, you can have a perspective. I mean, if you read the risk factors, and I used to do this for a living, even write them, you would never buy the stock. It tells you everything that can go wrong. It's because they don't want to get sued for misrepresentation or omission. You'd be frightened out. You say, I'm never buying this. And yet, a company like Tesla can be worth billions of dollars, tens of billions of dollars, even though it comes right out and says, we don't make any money, don't expect to make any money. A lot of companies like that. So I don't see what the danger is in cryptocurrencies. Yeah, they can go to zero. They come straight out. And by the way, there is no prospectus for cryptocurrencies because they're not securities and they're not centrally run. There's no issuer. But to the extent that you have an issuer in, let's say, an initial coin offering, then it's the same thing as issuing an IPO, a company that goes public via issuing shares. An ICO, they go public via issuing tokens, and they'd have to make the same disclosures. All right, now let's take a look at some of the prices. By the way, there were a lot of speculation about why the cryptocurrencies rose dramatically this week. None of them made really any sense. And this one doesn't make sense either, but it's actually more relevant. So Cumberland Crypto OTC desk reported spike in large-scale Bitcoin trades within an hour. And that is also in addition to the one, I think it was $80 million trade split over 3 crypto exchanges, Coinbase, Kraken, and Bitstamp around the same time. So we don't know if this is a single actor, coordinated action, but it may be that the individual or individuals or consortium or those that are tipped off or for whatever reason they were buying, they buy generally when you want to make large purchases on the over-the-counter exchange. And the reason you do that is you get a negotiated price And once your price is negotiated, then you can you just make the deal. That's how the LBMA works also for gold trading as well. So you don't have to signal to the market in general that you've got a bid in like for 10% higher because your bid is so large. It causes a lot of other trading participants to see that there's a big bid out there. Somebody wants to get a lot. You figure you'll put in a bid a little bit lower, but won't have as big of a offer. I mean, as big of a order in, and you'll get your bid filled, and then it all starts to ratchet higher because you get this pylon effect where everybody's now bidding because they see the whale is in there. So that's why generally large purchases of commodities will be bought on the over-the-counter. And this Cumberland Crypto OTC desk was mentioned they saw a large order. It's possible that there's not enough Bitcoin for sale on the over-the-counter, because a lot of the over-the-counter supply will come from miners, because the miners will mine it, they'll accumulate it, and they'll want to get rid of it, but they're not going to go and trade on the exchanges, so they'll do these negotiated deals. So it's quite possible, because there's been a lack of profitability in mining, that the miners haven't accumulated as much Bitcoin, and now when investors want to go out and buy some, there's just not a lot available on these over-the-counter. So it's possible that the over-the-counters trading got tapped out, and then that one individual or groups or whatever it was who wanted that $80 million worth of crypto had to then go to the exchanges, and when that happened, it was off to the races, because someone said, look, all this money coming into Bitcoin, and then people buy Litecoin and they buy the whole sector. It was definitely Bitcoin that went first. Now we did see a couple of months ago, about 6 weeks ago, Litecoin just took off for no reason. None of the other ones did. So maybe there was the same situation there. Not quite sure what happened. Now let's take a look now also at some of the prices, and somewhat instructive here, because we talked last night about, well, what's next? We had a big spike, then went down a little bit, and we're saying that if the prices were to somewhat stabilize from here, then probably have a good shot of probably going a little higher. If they were just to drop right back down, then there would be a danger that they could fall even further. But look what you see here with Bitcoin. If for those of you looking on your phones or on your TV screens or your computer screens, you could see the big spike on the 2nd, then the run up for the next day, and then you saw a bit of a pullback yesterday. But look at today, you're seeing a creep higher. So it's not stabilizing lower, it's somewhat drifting higher, which is the way I look at things, is a good thing for higher prices. I'm not a chartist, but that's just what I see in looking at that chart. I don't do cups and handles and golden crosses, and I don't get that advanced into it. Let's take a look at Ethereum. Same thing. Very similar chart. Big spike on the 2nd, then an even bigger run up. Then it went down, and then yesterday it was down, and then today you can see it drift higher. Now remember, going into a weekend, there's going to be lighter trading. I don't know if those will hold, but definitely worth keeping an eye on. Litecoin, same thing. You can see it went up, and then it went up even more. Just big straight shot from 60 all the way up to 100 pretty much. And then it went down yesterday, but you can see it's drifting higher today. I think right now the price is, it's like 88.40. That's about what I have there, is $89.02 when I took this screenshot just before we got on the show. Bcash, very similar as well. You get your big spike up. That one up double. Drifted down yesterday, and it looks like it's drifting slightly higher today. Now, Ripple was a different story. Doesn't have the same chart as Bitcoin, Bitcoin Cash, Ethereum, and Litecoin, which are all very similar. But let's take a look at the Ripple chart. It went up, and it really went down yesterday, and it spiked. And today, though, it's going down. So, different chart on Ripple. What else do we have? Any other charts? Stellar. Not many people followed that one, but we did have some requests for that one. Very similar chart, except today went down a little bit, so it's did have the up and up and up and then down a bit, and then up and then a little bit down. And BAT, and follows BAT, that's why I got that one here. That's a different game here too. This one had been rising before the big spike. So when the spike happened, you could see it went down. Look at the last couple of days. It actually went down when all the others were going up, but look what's happening now. Today, it was making a bit of a spike. And I think it's because BAT is not one of these. It's not a cryptocurrency. It's a small market, so it's not trading like the larger players in the market. But anyway, we will track the cryptos. But tomorrow, it will be just Saturday Night Silver with Smaulgld. We're not going to cover any cryptocurrencies. We'll only discuss gold to the extent we have to discuss the gold-silver ratio. So, let's take a look now at what is many of the mug stackers' favorite part of the show.
Uh-oh, we got a moron here.
Presenting the distinguished international news commentator and foreign correspondent.
This has been an extraordinary week in world affairs.
No, I told Hillary Clinton that that's moronic.
All right. Well, today there was a big story in Reuters, and they're saying they've gone full dollar collapse. This might as well have been written by some gold pumper talking about game changers. I remember once in CNBC, they also repeated that stupid gold back yuan. It's going to be a game changer. So once in a while, the mainstream media catches the fever from the alternative media with these fantastical stories. But before we get to the story and the analysis, I want to give you background. I'll do it quickly, but a lot of people are not fully aware of the background. They get this type of hyperbole and hype and misinformation about what happened and why there's a petrodollar and why it's going to be game over and game changer when it finally ends, and dollar collapse and multipolar world. And all right, let's go to 1944, Bretton Woods, Mount Washington Hotel. There it is. That's out there in northern New Hampshire. I took that picture in 1980 or 1981. Actually drove up there. Actually, I took a People's Express flight. That's a different story. Okay, well, there it is, and that's where they met in 1944. Now, who met there? Representatives from all the major countries at the end of World War II, and what they were trying to figure out was the new financial system was a reset. And the reason they were redoing the financial system was England used to be the kingpin, the pound sterling, sun never sets on the English Empire. Well, World War II pretty much threw them out of the power structure, so to speak, because the United States pretty much, along with Russia, won World War II, and England lost a lot of its colonies. And the top dog in the Western world clearly was the United States. And they met, and they discussed, and they debated, and there were people who wanted a gold standard, and there were people who wanted Bancor or John Maynard Keynes, some kind of artificial currency. And somewhat of the compromise was that they would accept the United States dollar as a reserve currency, but it had to be backed by gold, and the way it'd be backed by gold would be not backed by gold in a traditional sense, where if you own dollars in the United States, like you had a silver certificate or a gold certificate, you can go and get gold. Now, back in 1933, they got rid of that in the United States, and since that date, there were no gold coins circulating in the U.S. as money, as currency, and therefore, obviously, you couldn't have a gold certificate and go get gold from the government. So in 1944, they weren't suggesting that Americans could get gold, but that all these banksters, as some people would call them, would be able, the central banks that were signatories to the Bretton Woods Agreement, could get gold for their dollars that they would accumulate in international trade. And if they wanted to, they can bring those dollars back to the United States. The U.S. Treasury, not the Fed, would then turn over the equal amount of gold priced at $35 an ounce, where the price had been set by the Gold Act of 1934. Okay, so that deal went on for a while. Now, it was destined to fail, as you can imagine, because they got to fix the price at $35 an ounce. And you would imagine that if you are a country and you're starting to accumulate dollars after World War II, it's only prudent that maybe you turn some or all of them in for gold. I mean, the dollar is not as good as gold because there's no way the United States had enough gold to back every redemption. It clearly was fractional reserve. The gold wasn't really a gold standard. It was a dollar standard with a little promise that the dollar could be converted into gold only by central banks that were signatories. So things went well in the 50s because the United States was a dominant exporter. And what was happening? Well, countries weren't accumulating dollars. They were buying a lot of goods from the United States and sending dollars or whatever payment they were sending to the United States to buy all of the major goods. And the reason for that was Europe was decimated and the United States had just gotten started building munitions and cars and tanks and planes, and the United States was a manufacturing powerhouse. So there weren't a lot of dollars overseas. Well, that started to change in the late 50s, where Italy, France, Germany really started ramping up their industries, and they started to do some exports, some to the United States, some around the world. But as part of gaining a surplus, they started to gain dollars. And then by the 1960s, they were getting a good war chest of dollars. They'd started to build up their own reserves. The United States was starting to run some trade deficits, starting to run some budget deficits. Decided it would be a good idea to invade Vietnam, to also start the Great Society, to give everyone Medicaid, to create a welfare state, a warfare state, to decide also while they were doing that, they'd go to the moon at the same time. And a lot of the countries started to get nervous that, they probably don't have enough gold to back everything that they're doing, and not even enough to back the promises they made to turn our dollars into gold if we were so bring them in. So you started to see in the 60s a lot of requests for gold conversions from France, Switzerland, Germany. They would send the war boats over and the gunships and collect their gold and then head back to France or Germany or wherever they had come from. And still the price of gold was still $35 an ounce in the 60s. Been set there in 1934. So there was a lot of talk. What do we do? Well, can we ramp up gold production? Now, South Africa was tapped out. You couldn't get any gold from Russia or China because China didn't really have a gold mining business at the time. Russia did, but both countries were communists and there was really no trade going on with them. So the United States relied upon, or the world relied upon, Saudi Arabia to pump the money supply, so to speak. Well, Saudi Arabia was tapped out and they couldn't really produce much more. Then they thought, well, maybe we'll just devalue the dollar and then the gold price will go higher. The United States did not want to devalue the dollar, so the gold price stayed at $35 an hour. The London Gold Pool tried to keep the price, manipulated $35 an hour, $35 an ounce. And you got the situation where it was pretty obvious to everyone that if you had dollars and you could convert them into gold at the United States, well, you better go do it while you still can. And there were up and up and up redemptions of gold from the United States. And finally, in August of 1971, Nixon went on TV and said he was going to temporarily suspend the conversion of dollars into gold at the United States, i.e. closing the gold window because of the speculators. That was the reason. It was the speculators. And they've never resumed that ever since. Now, you could imagine if you were signatory to the Bretton Woods Agreement, whoa, we got a deal here. Look, see that place, Bretton Woods? We all met there, or our forefathers met there 20, 30 years ago, and they said, you got to give us gold for our dollars. And Nixon said, yeah, I guess we do, but we're not going to. And then John Connally, Secretary-Treasurer of the United States, met with the G7 or the equivalent thereof, whether it was G6, 5, 7, 9, whatever it was at the end of 1971. He went to the meeting and he said, yep, it's our currency and it's your problem. And that really pissed off the Europeans. So the Europeans started to think, well, maybe we can get the United States, they'll take a year off from this gold standard stuff, let them get themselves sorted out, and maybe they'll go back on this Bretton Woods gold standard. And he's like, no, we're not interested in doing that. Nixon said flat out, the reason the dollar has value is not because it's backed by gold. He didn't say this, but he did say what I'm going to say, but he didn't say the dollar has value not because it's backed by gold. he did say the dollar has value because it's backed by the strongest economy in the world. That was his point, and therefore, what do you need gold for? What does that have to do with anything? And in fact, the United States actually believed in CIA documents that gold would become less valuable. They were struggling to keep the price down at $35 an ounce. That's because there was this monetary demand for it. They thought, well, you remove the monetary demand, price of gold's going to go down because it's only going to be good for jewelry and trinkets. Well, that didn't happen. Gold price rose as people realized if the dollar wasn't going to be stable, well, then you better get some on your own. But you couldn't do that in 1971 because pursuant to FDR's gold confiscation and outlaw pretty much of private ownership of gold in April of 1933, you couldn't own gold. And you couldn't own gold until December 1974 in the United States. And of course, once that happened, gold really started to take off, culminating in a $800 price from $35 all the way to $800 in 1980. We're getting ahead of ourselves, but the point is that the Europeans were pretty pissed off. Nothing they can do about it. Connolly flaunted it in their face, saying it's our currency, your problem. Go pound sand, and whatever you want to do, have at it. But dollar's the dollar. Well, the problem is that the markets didn't take kindly to that, and that put the dollar under attack. And the Europeans started thinking, well, okay, yeah, no. They're starting to think de-dollarization back then. They're thinking, okay, well, why don't we just trade? Look, we got francs, you got Deutschmarks, you got Italian lira, you got Spanish pesos, you got British pounds. Why don't we just use our own currency? I mean, if theirs isn't going to be backed, ours isn't either, but why have the hassle? Well, the United States, no, we can't have that. So Kissinger and Nixon quickly went around to the Gulf countries, basically Saudi Arabia, and said, look, here's what you got to do. You price your oil in dollars and only in dollars, and except for payment, dollars only. So Arabia was like, okay, what's the point of doing that? And I said, well, you do that. We'll make sure no one attacks you, and we'll sell you military hardware. We'll give you military hardware too. So Arabia's like, all right, that sounds good to me. Well, what did that do? That created at least a temporary reason why you'd have to hold on to your dollars. You wouldn't just dump them into another currency and then start trading that other currency like the pound or the franc or the Deutschmark or the lira or the peso or the guilder or whatever they had at the time. You had to have dollars because Western Europe didn't have the option of buying Iranian oil or Russian oil. The game in town was Saudi Arabia. So, because of this arrangement, a very clever arrangement, the European nations, which were the only nations that mattered economically in the world at the time. Japan mattered a bit, definitely, but China didn't matter, Russia didn't matter, anything behind the Iron Curtain didn't matter. They didn't trade with the rest of the world. They traded amongst themselves. China wasn't that big of a deal. Russia wasn't that big of a deal. The big deals were Germany, France, Italy, England, Spain, the Netherlands, Belgium. Those were the countries that produced the bulk of the economic activity outside the United States. So then they realized, okay, well, I guess we have to have dollars. And that still didn't give the United States dollar firm footing because all throughout the 70s, after these petrodollar arrangements were created, we had massive inflation. Now, the Saudis and OPEC, they weren't very good either, necessarily helping out the United States. While they had the petrodollar agreements in place, that didn't stop them from doing 2 oil embargoes. That would be as if they were doing gold embargoes when you did Bretton Woods. There was no oil in the United States. We didn't have the domestic shale production. We didn't have pipelines. The United States was pretty much relying on Saudi and other oil. And we had gas lines, gas rationing, and there was tremendous inflation throughout the 70s. Long story short, we move into the 80s. Inflation has been quelled, higher interest rates, Volcker. The world starts to move on. Now the dollar takes off. The dollar index goes sky high. The United States economy under Reagan is doing 4, 5, 6, 7% GDP growth. Inflation is down. Morning in America. That whole story there. Yuppies coming about. And now European nations and other nations are accumulating dollars, not just because they have to buy oil from Saudi Arabia, but because the U.S. Treasury and the dollar has become a preferred currency based on market dictates, not because they need to hold dollars to buy oil. Now, they still needed dollars to buy oil, but they didn't need all of the reserves to be held in dollars just to buy oil, because they had reserves far larger than amounts they needed to buy oil. So the petrodollar arrangement, what they did essentially was provide the United States with a period of time where they can get their act together. And they did. I mean, the U.S. did get its act together in the 80s. And ever since the 80s, up until QE, the petrodollar arrangements were always viewed as the underpinning of the dollar. However, what was happening from the 80s, 90s into the financial crisis was the dollar had already taken on a demand of its own outside of the demand to buy, to have dollars to buy oil from Saudi Arabia. It's a great deal to have, and it does provide some underpinning, and did provide some underpinning, especially in the 70s, early and mid-70s, when they were first introduced. But as time went on, they became less important. And as we're going to see, countries hold dollars in such large amounts, and they hold treasuries in such large amounts. It's not just because they need the dollars to buy oil. But what's happened over time is, and I've been mentioning this now for at least 5 years, that as the United States developed its shale oil and other oil drilling capacities, I think back in 2014, I was saying if shale oil takes off, it solves 3 issues. 1, it becomes energy independent. 2, it creates jobs. But 3, no longer needs Saudi Arabia to create demand for the dollar, because the export of shale itself will create its own demand for the dollar and replace much of the Saudi Arabian demand. Now, it didn't have to replace Saudi Arabian demand, because the Saudi Arabian demand never went away. The United States is still pals with Saudi Arabia, and in fact, they're bigger pals with Saudi Arabia now than they've ever been. But there's always been issues in the U.S.-Saudi relationship. No two ways about it. You have to dance the fine line between peace between Saudi Arabia and Israel. There's the 9/11 issue. There's the Khashoggi issue. There have been issues with the United States where relationships have been strained. Back in, I think it was September of 2015 or 16. It was 15. The Congress was going to, maybe it was 16, it doesn't really matter. The Congress was going to pass a bill that would allow victims of 9/11 to sue Saudi Arabia. And Saudi Arabia said, okay, buddy, you do that and we're dumping treasuries. That was the words they used. Publicly stated, it wasn't speculation. They said, you do that and we're going to just nuclear option. Now, they didn't have that many treasuries anyway, so it was kind of a pointless threat. I think they had $80-90 billion, maybe less, of treasuries. It's like half a day's worth of QE. I mean, half of a month worth of QE. Wasn't a big deal, but they threatened it. And Congress passed it anyway. And then Obama said, oh, we're going to this. And he vetoed the bill. Congress overrode the veto. I think this was 2016. Well, that meant it was time for Saudi Arabia to dump their treasuries. Well, you know what? They didn't dump anything. Trump got elected, and look what happened. I don't have it going all the way back, but Saudi Arabia, yeah, they've added, look, they're at $162 billion right now. At one point, when they made the bluff back in 2016, they were at like 90, as I mentioned, like 89. They've actually doubled their treasury holdings since 2016. So there was a big bluff there. And the 9/11 bill went through, and they didn't dump anything. Now, where are we today? Big story, exclusive in Reuters. Now, Reuters is going full dollar collapse. Here we go. I see this morning, and I write, Reuters goes full dollar collapse. And the headline is exclusive. Saudi Arabia threatens to ditch dollar oil trade. Yes, there it is. That's the whole end of dollar hegemony. When the petrodollar ends its end of the dollar, and its dollar collapse, and gold 50,000, and they're threatening to sell oil and currencies other than the dollar. Now, first of all, it's just a lot of talk, and we'll see. It's sources say, and then even in the article it says, I'll read you the article. It says, yeah, but they're probably not going to do it anyway. It's a hype article. It's stupid. It says, Saudi Arabia is threatening to sell its oil and currencies other than the dollar if Washington passes a bill exposing OPEC members to antitrust lawsuits. 3 sources said. Okay. Who are the sources? Are they the ones who make the decisions? Are there really any sources at all? Then they said that the option had been discussed internally by senior Saudi energy officials. 2 of the sources said the plan had been discussed with OPEC. So now they're all going to gang up on the United States, right? The chances of, then it says, and this is why the story is complete and cows utter bullocks. The chances, well, there's cows utter and there's cow bullocks. Anyway, the chances of the U.S. bill known as NOPEC coming into force are slim. Okay, so then why the hype? And then they say, and Saudi Arabia would be unlikely to follow through. But the fact that Riyadh is considering such a drastic step is a sign of the kingdom's annoyance about political U.S. legal challenges. Yep, just like they were annoyed when the United States passed the 9/11 bill. They're locked at the hip. The United States looked the other way. The whole world wanted to sanction Saudi Arabia for killing that diplomat Khashoggi, or whatever he was, in Turkey. The United States did exactly what Saudi Arabia wanted. They shut down the Iran deal. They're mortal enemies. Saudi Arabia has billions of dollars of investments in Silicon Valley. They know they can't just be an oil country. They've got to branch out. They know the oil is eventually going to run out. They got big investments in the United States. Yeah, so they decide, hey, we're just going to ditch the dollar. And you know what the United States is going to do? Freeze all of their Silicon Valley investments. Because then Saudi Arabia is of no value to them whatsoever. But now the story gets even more moronic. So you see, they're already saying there's a slim chance that the bill will pass. There's an even less likely chance that Saudi Arabia would do it. We've also shown, man, this is ridiculous. I say never go full dollar collapse. And then, of course, the gold pumpers see this and they say, whoa, and they cite this article. Yeah, whoa, Reuters goes full dollar collapse. Never go full dollar collapse. But that's what Reuters did. This is the type of what I called it immediately, fake news. This is fake news. If true, sources say, unlikely, slim to none, but we got a headline out of it. And you know the gold pumpers are out there. End of dollar hegemony, end of the petrodollar, Petro yawn, and yeah, all this is going to happen, and then gold's going to be 50,000, and hyperinflation in the United States. Yeah, so to recap, Saudi Arabia is not doing it, hasn't done it, has no reason to do it, and Saudi Arabia is no longer the big oil exporter in the world. Guess who is? United States, man. United States. That's right. United States exports more oil than Saudi Arabia. But let's go a little bit further where the plot thickens. This is the moronic part of it. So, you have a story that it's an exclusive, breathless Reuters announcement, inside information. 3 unnamed sources say that Saudi Arabia is thinking about trading their oil in currencies other than the dollar. And in fact, they go as far as to say that, I didn't read you the full hype. The best part about it is, not only are they going to do this, keep in mind, but that if Saudi Arabia would do it, it would be game over, game changer, end of dollar hegemony, the whole story. And let me show you the exact language that the Reuters was saying. So first of all, it's based on nothing, the 3 unnamed sources, and the bill is unlikely to pass. It's unlikely that Saudi Arabia, especially based on past threats, is going to follow through on it. The United States, they got every reason to be with the United States. They don't have leverage over the United States. The United States doesn't need their oil the way They used to need it. Saudi Arabia is heavily invested in Silicon Valley. They need the United States, and the United States protects them. And people say, oh, China will protect them. No, good luck with that. Okay, now, here's what it says. In the unlikely event Saudi Arabia were to ditch the dollar, it would undermine its status as the world's main reserve currency, reduce Washington's clout in global trade, and weaken its ability to enforce sanctions on other nations. And then one of the sources familiar with the matter said, the Saudis know they have the dollar as the nuclear option. BS. They were saying Russia's going to dump the dollar. Russia's going to dump the dollar. Well, you know what? Russia did dump the dollar. Russia got rid of all of its treasuries. Doesn't have any more anymore. Oh, where's the damage to the dollar? None. None at all. So, Saudi Arabia, even if they were, first of all, they're not going to. They're not going to switch out into other currencies. But the real problem with that analysis, the real moronica of it is, Saudi Arabia is not that important anymore in the oil. In other words, the amount of trade that they would do in other currencies would not be significant, even if it was all from now on. They didn't take any dollars, which is not going to be the case. Many will still pay in dollars. Probably only China would pay in yuan and a couple other nations. But the amount of global trade that is involved in Saudi oil is it's not a fly speck, but it's not that big of a deal. But here's the real interesting part. Bloomberg is now out touting that the biggest Saudi oil field is fading faster than anyone guessed. And they cite the Aramco IPO documents, maybe the reserves or the amount that they can produce in a given year or day I think it is not as great as it once was. But again, one reason countries hold dollars is to buy oil, but the U.S. is the world's largest oil producer and exporter. But you're hearing this dollar collapses, Reuters, because sources say, but they probably won't. Okay, and therefore it's going to undermine the dollar as a world reserve currency. No, but think of it this way. If it's true that Saudi Arabia is going to run out of oil, and therefore they're going to price the last few drops they have in Chinese yuan, how is that going to harm the dollar? If Saudi Arabia, they're admitting, is on a diminishing path, they still accept the dollar for their oil, they still price it in dollars, but if they're going to lose a market share, meaning their gold production is going to decline, their exports are going to decline, now they're going to piss the United States off and say, we're not going to take the dollar, we're only going to take Chinese yuan. Well, how's that going to help them at all? And how's that going to damage the dollar? Because if they only got a few drops left, who cares what they do? So this is where we are. And this is, again, this type of analysis, the gold pumpers do not want to hear. You don't know what you're talking about. You're a shill. The dollar's days are numbered. I heard Patrick Letter say or some nonsense. And they don't want to hear the actual reality of what's going on. Sure, dollar eventually will go to zero. Everything will go to zero. Everyone will die one day. But this idea that somehow there's this imminent collapse, we've been hearing end the dollar hegemony from Ron Paul since 1985. One day and one day soon. We don't know how soon. Yeah, you don't know. Got cut off again. Yeah, but we're back. So what I was saying is that all this clickbaiting, it's interesting. The mainstream media is nowhere, they're not immune from doing it. And when people hear this isn't a popular narrative either. The same way that the gold pumpers want to hear that the government's going to shut down cryptocurrencies, the same way the crypto bugs want to hear that the Fed's days are numbered, fiat's numbered, because cryptocurrency is backed by math and it's be your own central bank. When I point this stuff out about end of the petrodollar, I've been saying the petrodollar is irrelevant already. Well, they're now saying because that it has even less oil, well, it's going to become even more irrelevant to supporting the dollar. And because the United States actually is now a larger oil exporter, if somehow the only reason that foreign countries hold dollars is they need to buy oil, which is not the case, they hold it for other reasons, well, they're still going to need dollars to buy oil from the U.S. And by the way, they're still going to need dollars to buy oil from they're still going to need to buy oil from Saudi Arabia, because did I get shut out again? No. They're still going to need to buy oil from Saudi Arabia because that relationship hasn't changed despite a Reuters story and a bunch of other stories that we see out there. All right. I think, let's see. Got anything else to show you? Let's see what we got. Oh, what I was mentioning, and then I got cut off. I was talking about James Henry Anderson of SD Bullion, and he had put out, when he saw this, that this is clickbait, and he's absolutely right. And I said the article says sources say, and point out all the ridiculousness of the Reuters article, and they probably would not do it, and the law might not pass. And they didn't mention that Saudi Arabia is no longer the world's top supplier of oil, and they didn't mention that Saudi Arabia is running out of oil, and they didn't mention that the United States is the biggest oil producer. So the whole story is a can of stupidity. But I just wanted to point out, James Henry Anderson of SD Bullion, we've had him on the show. He's going to come back on. He's going to give us a talk on the 19th century silver. I think you wanted to talk about. We'll have to schedule that. This weekend we're going to do current silver on Saturday Night Silver with Smaulgld. But I caught him the other day. He's out today. He did an interview with this Russian guy, and I haven't heard it yet. But at one point in the video, as you can see here, he is slurping out of what appears to be, and I have confirmed, that is a Smaulgld mug, and that is the super classic mug. It makes its appearance at around 30 minutes and 48 seconds. He doesn't have it fully turned around, but at one point, I think in a second or two, you can see as he goes to put it down, you can see that trademarked red insert, that you see on the inside of the Smaulgld mug. All right, so let's go and see what you guys are saying. I mean, the quick recap is the petrodollar arrangements have long since become less relevant to why other countries hold dollars. The relationship with Saudi Arabia, while it is never perfect, they've made threats in the past before. It is not in their interest to abandon the petrodollar arrangements. But even if they did, they're not as significant a player in oil anymore. The United States actually exports more oil than they do. And there's other reasons far bigger why other countries hold dollars. And we saw that chart. We saw the chart. Where is it? There it is. We saw the chart of those holding foreign holders of U.S. Treasuries, and we're not really seeing a drop off at all. Now, by the way, did you know that Google, Apple, Facebook actually hold more U.S. Treasuries than Germany? So it's not like if China dumps its treasuries, I think that's 1/63rd of the outstanding treasuries. It's not Russia dumped theirs and it was nothing at all. I'll leave a chart up here for you. You can just take a look at it. I'll put it on the website tomorrow. This whole ditching treasuries and it's end of the dollar. So look, January 2018, January 2019, 1.168 billion they had. Now they have 1.126 billion. It's a rounding error. Japan, 1.066 billion. Now they have 1.069 billion. It's the same. Brazil up from 265 billion to 305 billion. United Kingdom up from 243 billion to 271 billion. End of dollar hegemony. They're all dumping treasuries. De-dollarization. Gold 50,000. Where do they? I don't know where they get this from. They hear an anecdotal story. Someone said the word reset somewhere. They overheard it, and now it's all over. It's done. Reuters says end of dollar hegemony. All right, let's see what you guys says in the comments. You know, Russia's not even on the chart anymore. Did that crush the dollar? No, bye-bye, Russia. Not there anymore. Go buy your gold. And makes sense for them. In fact, they never would have done that if the United States didn't put sanctions on them. If the United States was worried about Russia dumping treasuries, they would have thought twice about putting sanctions on them. They didn't. They put the sanctions on, and there's the sanctions. So, have at it. Dump your treasuries. There's plenty more demand where that came from. But the United States debt is unsustainable. Yeah, and so is every other country in the world that has a debt-based currency, which are all of them. None of them are based or backed by anything. None of them have intrinsic value. The dollar has its own demand because the world does run on dollars. It doesn't run on Iranian rial or Kazakhstan tenge or any of the other currencies. All right. Let's see who we got in the comments. They're tough loading sometimes, but let's see what we have here. Go all the way back to the beginning. No, it's not going back to the beginning. All right. Let's see if there's any questions. Also snagged a privateer storm round 2 ounce, said NJ. For $50, listed incorrectly. Interesting. All right. Again, I'm looking for the comments with Smaulgld. I am glancing through the comments, looking for those. I see you guys mostly talking amongst yourselves. I don't see my name yet. All right. Could be a short night. Mugsters. You guys are talking about mugs. Michael's got mugs, ammo, silver, and a waste of anxiety. Okay. Fiona Whalen. Lewis, this is a great interview. Very level-headed guy, this Dimitri. I can sign off on every word he said. That was the SD Bullion. Yeah, I started watching it. I didn't get it. I was just fascinated that he had the Smaulgld mug. I couldn't listen to anything after that. Felt they'd made the big time with the Smaulgld mug. Game changer mug. All right. I think that's it. You guys it. Michael Gailey. I do got into the fear point now. I just like to pick up stuff I like. Oh, I think what Michael's talking about is the thing we've talked about on this channel before. Yeah, you know, if you like silver coins, and you like the designs, and you want to buy them, buy them. If you think that silver is a rare commodity or it might go up, buy them. But the way they try to sell you silver is unbelievable. Silver shortage. JP Morgan's got hundreds of millions of ounces of silver. They got silver eagles. They melt them down. They're shorting. They're longing. They're gonna let it ride. I mean, just complete nonsense. Gold silver ratio should be 1-to-1. Relative rarity comes out of the ground 9-to-1. They all just repeat themselves. None of it makes any sense. And let's see. Pershanti girl, you guys are congratulating each other. You guys are a wealth of crypto knowledge. Metals and mugs, says Philip. Yeah, Palladium took a deep dive, says what every man should have, but I believe that Platinum took a nice, went up pretty well today. Yeah, it's up $1. All right. All right, that's about it. And Philip Quinn says, at least Lewis got me into gold. I don't know how I did that, because I never tell people to get into anything. But I do hope I put out a lot of information, a lot of analysis. And I'm not trying to be a contrarian. But when I hear these stories, end of the petrodollar and JP Morgan and silver and gold silver ratio and gold back yuan, I look into it and I don't see it. In fact, I see the opposite. But that's just me. I'm going to give you the 10 seconds and then I'm signing off. So if you got anything to say or comments, remember, tomorrow night we'll be back, Saturday Night Silver with Smaulgld. 10. Maybe I'll do it in Bernie again. So tonight we're going to get off the show because a lot of the people here have got too much money. And if you're talking on the show and you've got money, then you'll You're part of the 1%. You're one of the millionaires and billionaires. So I'm going to give you 10 seconds and then I'm going to get off. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1%, 0. Good night.